Welcome to our NZD/USD analysis report covering September 22nd to 27th, 2025. In this comprehensive analysis, we'll examine the New Zealand dollar against the US dollar, providing you with key technical levels, trading signals, and actionable recommendations for both short and medium-term horizons. Our analysis is based on data from multiple trusted sources including TradingView, InvestingLive, ActionForex, Forex.com, and Daily Forex. Let's dive into the current state of the NZD/USD pair and identify potential trading opportunities in the coming weeks. Looking at the latest TradingView data, the NZD/USD closed at 0.57752 on September 26, showing a modest daily gain of 0.13%. The pair traded within a tight range between 0.57544 and 0.57762. Examining the broader technical performance, we can see a clear bearish trend developing, with the pair down 1.58% over the past 5 days and 1.26% over the past month. This downward momentum contrasts with the pair's positive year-to-date performance of 3.25%. The price chart reveals a steady decline throughout the week, with slight consolidation toward the end of our analysis period. This data provides the foundation for our technical analysis and trading recommendations. Our technical analysis shows the NZD/USD in a clear downtrend, with the price trading well below both the 20-day and 55-day simple moving averages. The RSI reading of 32.89 indicates the pair is approaching oversold territory but hasn't yet reached extreme levels. Looking at our action bias indicators, we see a neutral stance on the hourly timeframe, suggesting some short-term consolidation. However, the 6-hour, daily, and weekly timeframes all show a strong downside bias, confirming the bearish momentum. The MACD indicator also signals bearish sentiment, while the price remains significantly below the key 55-day SMA level of 0.5900. This technical structure supports our overall bearish outlook for the pair in the coming weeks. Several key market developments have influenced the NZD/USD pair this week. Most significantly, US GDP was revised sharply higher to 3.8%, showcasing exceptional economic strength and boosting the US dollar. Meanwhile, New Zealand's consumer confidence declined to 90.9 in Q3, down from 91.2 previously, indicating continued caution among consumers. The US 10-year yield jumped toward 4.2%, further supporting dollar strength. Additionally, expectations for RBNZ rate cuts have grown, with Westpac forecasting a 50 BP cut in October. Our market factor impact chart clearly shows these elements exerting bearish pressure on the pair, with US GDP and rising US yields having the strongest negative influence. These fundamental factors align with our technical outlook, reinforcing the bearish bias for NZD/USD. Based on our analysis, we've identified two primary trading signals for the NZD/USD pair. Our strongest signal is a sell opportunity from the 0.5800 resistance level, targeting 0.5700 with a stop-loss at 0.5850. This trade offers a favorable risk-reward ratio of 1:2 and carries a strength rating of 7.5 out of 10. For traders looking for buying opportunities, we've identified a countertrend buy signal at the 0.5700 support level, targeting 0.5800 with a stop-loss at 0.5650. This trade also offers a 1:2 risk-reward ratio but has a lower strength rating of 6.0 out of 10, reflecting our overall bearish bias. Our signal visualization chart projects the likely price movement over the coming days, with the bearish scenario showing higher probability. Understanding key technical levels is crucial for effective NZD/USD trading. Our analysis identifies several important resistance levels: 0.5950, the August high, 0.5900, a psychological level, and the 55-day SMA, 0.5850, previous support turned resistance, and the critical 0.5800 to 0.5820 zone, which represents the recent breakdown point. On the support side, we're watching 0.5750, the September 26th low, 0.5700, a major psychological level, 0.5650, the 6-month low from April, and 0.5600, another psychological support. The 0.5800 to 0.5820 resistance zone and the 0.5700 support level are particularly significant, both showing maximum strength ratings of 5 out of 5. These levels should serve as key reference points for your trading decisions in the coming weeks. For the short term, spanning the next 1 to 2 weeks, we recommend two primary trading strategies. Our short strategy involves selling NZD/USD at the 0.5800 to 0.5820 resistance zone, targeting 0.5700 with a stop loss at 0.5850. This strategy carries a 60% probability based on current market conditions. For traders seeking long opportunities, we suggest buying at the 0.5700 to 0.5720 support zone, targeting 0.5800 to 0.5820 with a stop loss at 0.5650. This counter-trend strategy has a lower 40% probability. Several key events could impact these short-term trades, including the upcoming September NFP data release, developments in Trump's tariff policies, and New Zealand economic data releases. Our forecast chart illustrates both scenarios, with the bearish path showing higher probability based on current momentum. Looking at the medium-term outlook for NZD/USD over the next 1 to 3 months, we've identified two primary scenarios. Our bearish scenario, which carries a 60% probability, targets the 0.5600 to 0.5650 range. This scenario assumes continued U.S. economic strength, persistent or escalating trade tensions, and further weakness in New Zealand's economic data. Conversely, our bullish scenario has a 40% probability and targets the 0.5900 to 0.6000 range. This would require more aggressive Fed rate cuts, easing trade tensions, and improving New Zealand economic conditions. Key risk factors to monitor include unexpected shifts in Fed or RBNZ monetary policy, significant changes in global trade policies, and major economic data surprises. Our medium-term forecast chart illustrates both potential paths through December, with the bearish scenario showing greater probability. Successful trading requires strict discipline, especially in volatile currency markets. We recommend 5 key practices. First, always implement strict stop losses, limiting single trade risk to no more than 2% of your account. Second, avoid heavy positions in a single entry. Instead, distribute risk across multiple entries or scale in gradually. Third, closely monitor news events, particularly U.S. economic data and New Zealand indicators that could impact the pair. Fourth, remain flexible and ready to adjust your strategy as market conditions evolve. Fifth, wait for confirmation signals before entering trades, using multiple timeframe analysis to validate your decisions. Our risk management radar chart compares the optimal risk profile with the current NZD/USD risk environment, highlighting areas requiring extra caution. Remember, market conditions change rapidly, so always implement proper risk management.